This is Chapter 17, Video 4. Let's launch. In this video, we're going to go ahead and we're going to explain how the company accounts for its uncertain income tax positions under FASB ASC Topic 740. And there's a few other provisions that end up coming out here. And so FAS 109 provides no specific guidance on how to deal with uncertain tax positions. And the FASB supplemented FAS 109 and FIN 48, which is codified in ASC 740-10. The objective to which to provide a uniform approach to recording and disclosing tax benefits resulting from positions that are considered to be uncertain. And so, you know, I remember, this is going to tell you how old I am. I remember when FAS 109 was coming out and they were kind of talking about some of this stuff. And this was a big part of the, you know, as you know, if you take a look at my name, one of the things I have a master's in accountancy. I got it all the way back in 2003. They started talking about this in the accounting programs as I was going through the classes in 2001 and 2. And so, you know, this was something that they didn't really have a whole lot of specific guidance. Now, the FASB did go ahead and they said, look, we're going to have these other topics that are going to be considered as part of the discussion. And so these are actually brought in together in a uniform way in order to be able to better account for the uncertainty in the tax position. So one of the biggest concerns that we have, of course, as readers of the financial statement is, okay, management's telling us all this stuff. Now, let's be honest, what does management want to do more than anything else? Keep its job, okay? So are they going to go out and are they going to disclose bad things unless they have to? Probably not. You know, one of the things that's characteristic of all management, or all executive management, is they do have an ability to sell. And so they're going to want to come out and they're going to want to put stuff out that's just going to make them look good. But at the same time, that if it's not a factual picture, there definitely needs to be some rules put into place so we can make sure that we get clear and accurate information. And so that's one of the things that they'll do with the uncertainty in income tax positions. So ASC 740-10 applies all tax positions accounted for in accordance with ASC 740, including the following. And that's previously filed positions, expected filing positions, decisions not to file tax returns in a particular jurisdiction. And I know that sometimes some people might say, wait a minute, you can do that? Yeah, actually you can. There are certain times, I mean, I don't think you're going to see this for a lot of companies like IBM and all this other stuff where they're pretty much in all 50 states. But generally when you have, for example, regional companies and they say, look, we're not filing a tax return, and, you know, I'm just going to pick on one, Idaho. And one of the reasons why is because we don't feel like we have a reason to file in Idaho because of the following reasons, blah, 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 blah. Now, let's be honest. Idaho probably is going to read that and might kind of look at it and go, I don't think we agree with that. And so maybe they might come back and say something about it. Or if from a legal perspective, yeah, we have one employee that's out there, but the one employee who's out there, you know, fits into a criteria that doesn't make them make us taxable. You know, then that all needs to be disclosed. And so they're going to do that when they do have that decisions and they're going to disclose, you know, decisions not to file in a particular, file tax returns in a particular jurisdiction. And sometimes they're going to get into some of those reasons for it. Decisions to exclude potentially taxable income, and then choices made in classifying transactions as tax exempt or taxable. You know, for example, if they're, you know, and some of it's going to be like stupid easy. Okay, we have, you know, $1 million worth of income because we invested in bonds in the state of California, and we live in California, we work in California, and as a result of which, you know, they might do this because they're like, we care about schools, we care about all this other stuff, and so we targeted some of our investments to take care of those schools. They'll bring that up, and a lot of times the disclosure of that, some of it may be disclosed partially in writing, but a lot of it's going to be disclosed when they actually have the conference calls, if it ever gets brought up as a topic. But a lot of this stuff's going to be like, some of it's stupid easy. You know, if we invest in mutual bonds, it's kind of the reason why. But there may be some other things where it may not be so clear as to why, and so they've got to be able to disclose and and tell them why they feel that it is tax exempt, or if they had to report something that might not have been taxable in some cases, why it was taxable in this other case. ASC 740-10 applies a two-step process in evaluating tax positions. First, you're going to do the recognition process. And that's where the company first determines if it's more likely than not that its tax position on a particular account will be sustained by an IRS examination or if on its technical merits. And the company then determines the amount that's expected to be able to be recognized. This will happen. It happens in all companies, I guess. There's certain companies, though, that are just so large that what will end up happening is that they will actually have an IRS agent that's permanently stationed in the company. I'm not going to disclose any of them that I know, just because I've learned about some of them through my dealings with certain companies. But they're just so large that what happens is the IRS says, look, we're going to have a person that's stationed there that works on your account. If you have something that you think is a little bit, questionable, and you want to ask us about it, you walk in and you go talk to that person, and then they'll give you the skinny on what the IRS is going to say about that. And that actually still happens today. I know, but we're talking like ginormous companies, that usually get that benefit. As I recall, I think they have to pay for it. So, but they're also required to do it, just because of the fact that they're just so large. And then there's a measurement process, requires the company to make a cumulative probability assessment of all likely outcomes of the audit and litigation process. Company's going to recognize the amount that is greater than 50% probability of being sustained on examination and subsequent legislation. Again, the more likely than not. More likely than not is 51% or more. And then the amount not recognized is recorded as a liability on the balance sheet. So if you take a tax position on something and your lawyers come back and we say, okay, guys, well, what do you think our chances of succeeding in this in tax court is? They'll say, about 30%. You're going to have to record, you're going to have to do evaluation on that. You're going to have to record that and import it on your balance sheet. And then there's going to be some discussion about that as they go forward. Penalties and interest may include the provision or reported as a deduction in computing personal income. Pre-tax income, not personal income. I apologize. Disclosures of uncertain tax positions. Specific line items should disclose. And it's going to be the following things. Go ahead and take a look at that. There's not really too much I want to comment on that at this time. So this is going to be like a tabular schedule. Basically, they're going to have balance as of 2020, January 1, 2020, additions for tax position, blah, 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 so on and so forth. And they're going to get down to their balance there. And this is the method that they're going to use in order to disclose that and make sure that people will know about it. All right, so that's all I have for this video. I want to say thank you very much for attending this video, and I look forward to seeing you in the next one.